Hi, this is Joe. We're going to do an update on the S&P. I'm going to actually show you also how I would consider taking a graceful exit in a trade that you've done that maybe isn't going right right out of the gates. Or at least showing some signs that maybe it's not going to work. And I think it's important to cut your losses when you know that maybe the pattern is just not really showing the type of strength that you expect. So let's get into the charts. We're going to start out and talk about the S&P and do some analysis here, starting with the monthly. Again, we're still looking at a situation where we've got a rising 18-month line and a rising 40-month. The trend is still to the upside. If we zoom in a little bit, we can see there is price resistance up 3,200 is really the key level. I think there is resistance up at 3,350, 3,400, but I think if we can work our way through this most recent resistance level, I think that really increases the odds that we make a pretty decent move to the upside and probably are able to exceed to, or at least make it up towards new highs. Let's take a peek at the weekly chart and let's see if, so we've got this resistance in place. But one of the things that I have been talking about is the fact that, after the decline and the big V off the low, and you drove off the low with really good momentum, the question is, or was this going to fail at 3,200 and turn down through 2,950 to 3,000, which was underlying support, which we've been talking about for several weeks now. And it just doesn't seem like there's enough sellers to cause this to break down through this support zone. So, with that in mind, I have also been talking about the 18-week and wondering if we were going to hold our ground here and get the 18-week to start cupping around, then I think that increases the odds that we break out through 3,200 and move higher. So again, I think let's go to a daily chart. I'm going to show the three time frames all together. So here's the blue line is the 18-week line overlaid onto the daily. And you can see for the first time in this move that 18-week is just barely starting to rise. So don't have a lot of momentum in that line, but you do have the fact that it's turning up. The 18-month is also turning up. That's the red line. And then we're kind of flat on a daily chart. I'm going to go into the shorter term in a minute. Looking at this, again, if we stay inside this range between 3,200 and let's call it 3,000, even though it's really a little bit below that, if we stay in this range, this 18 weeks is going to start cupping around and really starting to provide a little bit better support. So I think you have to keep this in mind. I think the sideways right now is bullish, and the only thing that's really bearish is harsh selling to the downside, and we're really going to have to re-break the 18-week in order to get this into a bearish mode again. If we break the 18-day and come down, but we don't break the 18-week, we're caught in a range. And if you go back through my old videos on the market, I've been pretty much saying that the odds are that we're either going to get sloppy or we were going to hold support and work sideways. And if we work sideways, the odds are very good that this ultimately resolves itself to the upside. So that'd be what I'd be on the lookout for. Now, let's go back. I want to point this out. I think this is really important. The low, if you draw up the trend line from the low, we broke that. We rallied up and tested this high. It was about a 50% retracement of the down move. It qualifies as a test. And then it came down. And what I've been talking about is this 1, 2, 3 change in trend. I talk about in my book. It's a key to watch for if you're looking at a time frame. You want to know whether the trend is shifting just based on price action. This is a very good way to do it. Number one would be breaking the trend. Number two is testing the high. And then number three would be taking out this low. Now, you didn't do that. So we're looking at, if we go and look at the 4 time frames, you're looking at a pretty decent uptrend still with some resistance, but still a decent uptrend, at least based on the moving averages on the monthly. The weekly is showing the 18-week is finally kind of cupping around, and price is holding the 40-week. And then if we go to the daily chart, until we get the daily to turn down, I think you still have to assume we're going to keep grinding higher. So I want to go to the hourly chart because this really goes to the crux of, there's a difference between trading and analysis. The analysis has been basically that there's been an upward bias, that the market overall has shown pretty good strength to the upside. But because we rallied up into resistance and there's enough of a sign of some sellers showing up, I think it's worth taking low risk trades when you have the opportunity. And I have been talking for several weeks now about the ADX and the fact that red DI has not been able to hold 25 on a pullback. Well, we actually got that. We actually got that signal right here. We had a rally in price up to the 18, which failed, and the DI actually held right above 25, in between 25 and 30, which is really exactly the type of pattern and what I've been describing to look for. So, as it turns out, obviously the market made a little bit of a move to the downside, and then really just immediately reversed. So how do we view this, and how do you handle this from a trading standpoint? Because I think this is a key. I really do. The analysis is only going to take you so far. And if I'm getting short, and we actually bought some puts here as a hedge to our long trades, we didn't get short to the point where we really wanted the market to go down. We have long positions we wanted to hedge against. And so we bought some low risk options out of the monies, pretty far down in the spider options. And we gave them about 7 days out, figuring if the market was going to get going to the downside, you'd really get going. You'd really get some pretty fierce selling action taking place over the course of that week. They expired, and I'm okay with that because again, we have long positions on that really are doing exceptionally well to the upside. But what I wanted to point out from a trading standpoint, if you're in a trade like this, and your entry is somewhere in here, maybe it's a little lower, maybe it's at the bottom of this bar, but somewhere in this red bar down is where you should be entering based on this signal. And if you notice what took place is, first thing is, price went to a new low here. And if you notice what happened, the DI really didn't confirm on this initial phase. So you had a pretty strong move to the downside, and DI was trying to push higher, but it didn't confirm. And then it turned down with price just really going sideways for a couple bars. So we had pretty good confirmation of some divergence showing up. And then price went to another new low by dropping down here, and red DI again made another lower high. So we're talking about 2 levels of divergence in a very short period of time in this chart. So you were in it, and within 4 or 5, 6 bars, basically a single day, you knew that there was not a lot of strength in this trade because the DI line was not confirming the move. So this is something that I think is real important to keep an eye on. If you see this taking place, I don't know that you have to honor your stop up here. Okay, I mean, you can do that. You can stick with that if you want to do that. But for me, if I'm in a trade and I'm playing a directional move, and I think this market wants to move to the downside, and it makes a small move to the downside, or it makes a decent move to the downside even, and it doesn't have any confirmation in the DI, that tells me I need to tighten my stops or maybe trim it or reduce the position. I'd have probably been looking to, I would say, looking to cut this position. Aggressive would be here, somewhere in this zone, or waiting for it to come back up here. But I don't know that it's necessary to wait for this move all the way up at this high and get stopped out, a couple days later. So anyway, I thought this was, I think it's relevant. I call this taking a graceful exit, where, you know, if you're in and you get back to you're basically at a break even, maybe a small loss. And instead of taking the full loss, you're able to, you know, really mitigate your losses in this instance just by recognizing and staying in tune with what's taking place based on the momentum characteristics of the trade. So hope this was helpful. Please hit the like button. We'll talk to you soon.